For wealth creation, mutual funds can be an excellent choice for anyone who wants to create wealth by investing in the stock market, without practical knowledge, less risk, and for the long run. Let's understand it simply in 5 major points. Number 1. What exactly are mutual funds? When a group of people comes together and pool their money in one place, they hire a professional to invest on their behalf, and the profit is divided equally among the group, with the professional charging their fees. In simple terms, when a group of people deposit their money in bonds, stocks, and assets based on the advice of a professional fund manager, it is called mutual funding, or that fund is called mutual fund. Number 2. What are mutual fund units? Let's take an example. Imagine a pack of 15 candies costs $50, but the shopkeeper will only sell the pack. 5 friends want to buy it, but each has only $10, so they pool it together and buy the pack. Now, each one of them has received 3 units of candy. The value of each candy unit is 50 divided by 15, which is $3.33 for each team. The initial units can be calculated by multiplying the value of one unit by the number of units one is holding. Number 3. What about the net asset value, or NAV? It is the buying and selling price of the mutual fund. In the case of stocks, let's suppose the cost of one unit of any stock is $100, which means it will be bought or sold at this value of one unit. In mutual funds, your money is pooled together and invested in multiple stocks, bonds, and assets, each holding a different value. The net asset value is determined by how much each listed stock costs, and how much of your pooled money will be invested in that stock. Simply put, NAV is the rate of one unit of mutual funds on which the mutual fund is traded. Number 4. What is the main advantage of mutual funds? Mutual funds is one of the saving option in a long run, or may be considered as a retirement plan. Out of the many advantages of mutual funds, the biggest advantage is that you can start early, because you can deposit a minimum of $100, with some funds even allowing you to deposit as little as $1. But take as much time and knowledge you need before investing. Number 5. What is the disadvantage of mutual funds? The disadvantage is that they can be risky in the short run, especially during times of recession and COVID-19. They can also be volatile, especially equity-based or sector-based mutual funds. Is there any better plan than mutual funds? However, a systematic plan can be made for investment in mutual funds, which gives you the flexibility to generate the value of your choice in the given tenure, where one can add money in a systematic manner, weekly, monthly, quarterly, and yearly. It is known as systematic investment plan. That is the fundamental of mutual funds.